Hi guys, it's Chrissy. I am here for Mortgage Monday with Rich over here. So we are here today. I'm at Supreme Lending. You can see the logo is backwards, but it's right here, Supreme Lending. And we're here to talk about credit. So Rich is here to educate us. Apparently there's 2 hours of information. We're going to condense it down to 15 minutes.
Yeah.
So Rich, tell us, why is it important to have good credit?
Well, I'll tell you, one of the things that we look, that's the very first thing we look at when we're looking at financing and taking care of mortgages, because obviously credit determines, what programs you're qualified for. So the higher the credit score obviously opens up the gamut and gives us a lot more options. Typically when we have lower credit scores, we're kind of forced into certain programs.
Okay.
You know what I mean? So when you open up and have higher credit scores, it just opens up the possibility of doing so many different things, whether it be down payment assistance programs or reducing your mortgage insurance or getting less mortgage or no mortgage insurance. There's just so many different options, but credit is so important. That's the very first thing that we look at for sure.
Okay. So what are some tips about credit?
So I will tell you, and this is just what I say to everybody, is they don't teach you in high school or college about credit. They just don't. There's no classes out there. Well, there are classes out there if you really research it, but you're typically finding out about credit through life experiences and going, oh crap, I'm not supposed to do that.
When you turn 18 and
Yeah.
they hand you that shiny
Yeah,
card,
they're like,
"Just
hey,
swipe it."
go buy
Yeah.
whatever you want to. Oh, I gotta pay that back.
Yeah. Whoops.
So one of the things I'll tell you about credit that a lot of people don't understand is there's really two main types of accounts. There's installment loans and credit cards, or revolving debt, if you want to call it that. Installment loans don't have as much impact to your credit as revolving debt does. You can really booger up your credit cards, whether running your balances up or not paying them on time or having too many. And there's so many different
What's
things.
an
that play into
installment
it.
loan?
So an installment loan is going to be your auto loans or your car payments, mortgage payments,
Okay.
things that basically have a set dollar amount on a monthly basis,
Okay.
and then have a term so that it ends at some point. A
So
lot of
I
people,
agree to pay back this amount
Right.
over this time.
yep,
Okay.
and you can't really take any more money out on it. It's just a set dollar amount, so that's why you
Okay.
can't really screw it up. That's why it doesn't have as much impact to your credit, because credit scores are really more credit management scores,
Okay.
not actual credit
Okay.
scores, if you want to call it that. So the reference I give people is kind of like attending school. You have to use your credit to get scored. So you have to go to class to get grades, right?
Yeah.
So hey, what's your GPA? It's kind of like what's your credit score. So
Okay.
you can kind of relate it the same way.
Adult report card.
Yeah, exactly.
Okay.
So I always tell people when they say, oh, I graduated and finished school. No, you didn't. You're still in school
Yeah.
your entire life. But the other thing is you have diversity in your credit. So you want to have installment loans, you want to have revolving debt, you want to have real estate, you want to have all these different facets because it takes into the algorithms that give you scores. So, having different accounts is kind of like having different classes. I went to English, I went to social studies, I went to, And
Yeah.
that's how I got my GPA.
Okay.
If you don't go to school, you don't get grades. So if you don't use your credit, you don't get scores. So you have to use your credit. I always say positive credit trumps negative credit all day long. So there's a lot of people out there that are like, oh, I just want to pay cash for it.
Yeah, I have people that do that too.
Yeah, you don't want to do that at all. You actually want to use your credit. Credit's kind of like a bloodline for, I tell people all the time, the things that you have to finance, if you look at the cost of a home, let's say it's a $250,000 home. If you have $250,000 in the bank, raise your hand out there. You probably don't.
You can call me if you do.
Yeah, that'd be great. Cash. Most people don't though, so you have to finance a house. Most people don't have 40 grand in the bank for a car, or 30 grand or whatever the car's cost is. Those are items that you have to finance. So when it comes to installment loans and those items that you need to finance, use your credit cards to build up your scores and use it wisely to get yourself to a point where your installment loans are that much cheaper. You know what I mean? So the other thing that plays into things regarding your credit, let's go back to that. So referencing the credit cards themselves, you can really build up your scores with credit cards. Having 2, 3, 4 accounts is not bad. I'm not a big fan of department store stuff, so big banks, things like that, things that give you, cash back or things like that. Because if you can spend it in other places, if you're limited to a Kohl's card, and I only shop at Kohl's, you can't consistently use that unless you're shopping at Kohl's all the time.
Okay.
But the point is, and I'm picking on Kohl's, but the point is that having department store stuff limits you to where you can spend it.
Okay.
Where like a large bank, I can get gas and I can get food and I can
Yeah.
get, you know, so I personally have assigned certain cards, certain things based on the cashback rewards I get, whatever the case might be. But I utilize them for those specific reasons. So I'm consistently using my credit cards while keeping them on time. I mean, there's basically 4 things we look at. Number 1, if you're keeping them on time. Number 2, how many accounts you have. So how many credit cards you have. If you are like the cartoon where your cards fall out of your wallet and it's a long list of credit cards, that's not a good thing. You don't want to have too many. Number 3, how long you've had them. So long-standing accounts is good. Don't keep opening and closing accounts. That's not good. You want to have history on them. So the longer you have the cards, so pick them and be wise about what cards you want. The 4th thing is the proportionate balance to credit limit, or how much you owe on a credit card versus the limit on the card. So it's a percentage basically. So the proportion term is used on credit reports, but it's percentage is what it is. So the rule of thumb that a lot of people know is to keep your balance below 30%.
Okay.
There's actually an even better rule, and that's between 5 to 10% is where you keep your balance. So credit experts will say keep your balances at 7.5%.
Okay.
So 5 to 10%, obviously you're right in the middle. But that's essentially what you want.
I'm just doing
To
the
do on
math
your
on
credit
that.
cards.
So a $10,000 credit limit you can spend up to.
$500 to $1,000.
Okay, gotcha. So what if I don't have good credit? Not me, but what if somebody doesn't have good credit? What are some ways to improve that?
So a lot of times with paying your balances down, so if you have credit cards in place, pay your balances down, that has one of the biggest impacts to your score,
Okay.
just by keeping your balances low on your credit cards. Also clean up some of the old stuff. So June 8th of last year, 2018, they implemented new rules regarding medical collections.
Okay.
So if you pay those, they're supposed to be automatically deleted. I will tell you, a collection, which are commonly the issues that people have with credit, is things will get paid when you're young or whatever the case might be. You get kind of chased for like an electric bill or something like
Yeah.
that. Collections, whether paid or not paid, it affects your score the same.
Okay.
By paying a collection, it basically stops the bleeding or keeps them from constantly reporting it as an
Okay.
active collection. And then over time, it eventually falls off. You ever hear that term where people have stuff fall off?
Yeah.
A medical collection can be an instantaneous thing where if you pay that medical collection, they're supposed to delete it automatically. Now, you might want to follow it up and say, hey, based on those new rules, I want to get that collection removed by having a deletion letter from you. And then you can submit those to the bureaus and get that removed really quickly. But some of the very fast things to do is to pay your credit cards down. I will tell you, installment loans being paid off helps you none.
Okay.
So focus on your credit cards. And if you don't have credit cards, go get a secure credit card. Go to a bank. Go to your local bank, your bank that you go and bank at.
Rich, tell us, what is a secure credit card?
So secure credit card, they're going to hold money. So that's why, like with your current bank, they probably have some sort of secure credit card account that you can use. $300, $500, $1,000, they'll do whatever basically. Most people don't have a ton of money to throw at that, but it's basically money they're going to hold for 12 months as kind of like collateral to trust you, start building that trust with you. You use it like a normal credit card, and then over time they'll release that money back to you. That's why it's good to go to your current bank, because then it just goes right back in your bank account.
So like a $300 card, using that 7.5% limit?
Yeah,
So I'm just trying to do the
it's
math.
super
Like,
low.
It's not very much
15
at
to
all.
$30. Yeah,
Okay.
it's not a lot of money, but I will tell you, I've had people with zero balances, and I've actually had them put money in their account or put money on their credit card, and their scores actually went up from doing that. So
Okay.
it's basically an algorithm. You know, there's nobody sitting behind a desk going, hey, you know what? Chrissy's doing really good this month. I'm going to bump up her scores. Nobody's doing that. It's an
Right.
algorithm. Information comes in, outspits scores. So you kind of, if you fall into certain things, there's ways to improve
Okay.
your scores.
So that's something you guys can help us do.
Oh,
Like if
absolutely.
you can help us work that algorithm, whatever
Yeah.
that fancy
We know all the
term is.
rules.
Okay,
Yeah.
I don't know the rules. So we just do these rules. Just don't spend more than 7.5%,
Yeah.
and keep your balances low, and don't pay off all the installment loans.
I just have a rule of thumb in my head, like 10%. So,
Okay.
like I said, the on-time payments, like when it comes to credit cards, all my credit cards are at the same place, which is probably stupid, but I do it because I want it at a bank.
You don't want a
that-
Kohl's card?
No, I don't want a Kohl's card.
Okay.
No Kohl's card. No, but I like it because it's on my app. I just simply like pay the payment super
Okay.
easy. But I also have bill pay set up. So that's kind of a cheating way of making sure your payments are on time.
Okay.
I have automatic payments that are at least the minimum on those cards all the time. And then as far as like number of accounts, I've kind of just restricted myself to 3. That's me personally.
Okay.
And then as far as like length of time, that's just something that you can't cheat time. It is what it is. And then proportionate balance to credit limit. I just keep an eye on my credit cards, knowing where my credit limits are, and just making sure those balances stay that low.
You brought up a good point there, though. Like, you say you pay the minimum, at least
Yeah.
the minimum. Should we just pay it off every month?
I'm not a big fan of paying it off every month. I try to keep my balance. Yes, I'm going to pay interest on it, but I'm also building my scores. Like, I will always have high scores because of that. There's nothing wrong with paying it off. There's actually a trick to it. So this is a little bit more complicated, but your information is reported to the bureaus on a specific time of the month. So each card is basically assigned a time. Imagine how many accounts are out there. If all that information was delivered to the bureaus on the first of the month,
That's a lot of information.
it would blow up the servers. They could literally catch fire or something. As opposed to, you have assigned days for the credit cards or credit accounts that are delivered to the bureaus at certain times. And so because the accounts are reported on a certain day, you can kind of cheat that rule as far as like your balance is concerned. So in other words, I could pay it off. Let's say it's reported on the 15th.
Okay.
I could pay it off on the 30th,
Okay.
and then run it back up by the 15th to that 10% range.
Okay.
So then they pay it off, and then you get what I'm
Okay,
saying. You're kind of
yeah.
playing that game of when it's reported, because the bureaus are blind for 30 days out of the month.
Okay.
On the other one day out of the month that they get that information, they're getting what your balance is at that
How do we
point.
find out what that day is?
You can actually call the creditors themselves and say, "Hey, Bank of America, when do you report my information to the bureaus?"
Oh, that's like,
And they'll tell you.
okay.
It's typically around your billing cycle, typically, but
When you
sometimes
say
it's
they're
also-
blind for 30 days, I know we tell our clients when we buy a home, don't charge up your credit cards
Yeah,
in that 30 days.
yeah,
Because that's not a blind spot.
no.
No, they're going to find out.
They're going to find out that you
Okay.
increase it. So there's basically in the mortgage world, we do an LQI at the end, which is basically a last credit check, essentially. And there's a certain amount of tolerance that they'll allow, but if you ran it up way too
Okay.
much, it's
So don't
no
do that.
bueno. Don't do that.
So, awesome. Well, great tips. And thank you
There's
guys.
so much more
There's so much
information
more.
we
I'll
would
tap
help you
into it
out
next
with.
time.
Oh, yeah.
And we'll add to this time. But
Absolutely.
so I'm Chrissy, and this is Rich, and you can find me on Facebook where you guys are right now. How do you find you, Rich?
We're Lender on Facebook, so just do @Lender or search the Supreme Team. So literally
Perfect.
Lender.
Super
on
easy to
Facebook.
find them. Thank you guys so much for watching. Bye.